So welcome to this revision of India 36 only for you guys, which will be in 100% English. So in this revision video we are going to revise all the concepts of impairment of assets, and also we will go through the important questions of India 36. It is going to be a revision video, so if you have studied India 36 at any given point of time, I hope that you will be able to recall things after referring to this revision video. But before starting the revision, if you are watching this revision without subscribing to this channel, you should not do this, right? So first subscribe and then watch the revision video. Apart from this, if you like the revision video, do give it a thumbs up button. Also, if you have any friends from South India who wants to refer 100% English revision videos, you can surely refer to them as well. Also, there is a Telegram channel in the description box. You can join it for these board notes. Okay, chalo. So without wasting any time, let's start the revision in 3, 2, 1 and go. First of all, the number of this index was index 36. Name was impairment of assets. There are approximately 9 points to be discussed. The first point being the point of scope, that is for which all indices we have to apply this impairment. First of all, let's understand the meaning of impairment. It means decline in the value of asset, right? So you have to check whether your assets value have declined or not. So for which all asset do we have to check impairment? So this applies to total 3 indices: index 16, index 38 and index 40. That means you have to check the impairment for PP, intangible and investment property, right? Okay, this is the scope. See, if you read the bare text, it says it applies to all assets other than. So instead of referring to other than, you should know which all asset it is applicable, right? Okay, the next point is identifying when an asset may be impaired. Acha, before referring to this part, you do remember in class I have given you a good example of impairment test. How do we check the decline? How do we do the impairment test? So just refer this basic example once and then we can revise the concepts very easily. So the basic example talks that to conduct impairment test, we need to find two amounts. One is carrying amount, one is recoverable amount. Carrying amount we will get directly from the balance sheet, the cost of the asset minus depreciation. How do we get the recoverable amount, right? So to recover the value of the asset, you have two methods. Either you can use the asset or you can sell the asset, right? If you want to use the asset, the value is known as value in use, and if you wish to sell the asset, that amount is known as fair value less cost to sell. So to recover the value of the asset, you only have two methods: either use it or sell it, right? Now, which value I will consider as recoverable amount after these two? So we will take whichever is higher. Of course, in the case of use or sale, however you realize the higher value, that only you will consider as the recoverable amount, because you will do that only if for example, let's suppose in usage I am going to get 1 lakh benefit and in sale I am going to get 90,000 benefit. Of course I will use it, right? That is why. So now how do we find the value in use and how do we get the FVLCTS? So let's say for example I had a machine which was used in manufacturing of biscuits. So what is value in use? It is nothing but present value of future cash flows. That means from using the machine, you will generate biscuits and then you will sell the biscuits, right? For in the future years. So you have to estimate your future cash flows through selling the biscuit. Here you are not selling the machine, you are selling the output from the machine. So whatever output you are selling, you will realize some cash inflows, right? Present value of those cash inflows are known as value in use, right? So cash flows will be given, discounted will be given. Just take the present value, it is known as value in use. Also, in value in use, one more thing is to be added, and that is if the remaining life of the asset is 5 years. At the end of 5 years, I will sell the asset. First residual value. That residual value you have to add in the last year cash flow as well. Okay, this is known as value in use. Then what is FVLCTS? If in case this machine you are going to sell immediately, so what value you will realize on immediately selling the asset? That net selling price is known as FVLCTS, selling price minus cost to sell, right? That is known as FVLCTS. So let's say for example my value in use, if I use the asset for another 5 years, in present value terms I am going to derive a benefit of 46.68 lakhs, but if I sell it I will derive a benefit of 38 lakhs. So whichever is higher, so recoverable amount is going to be 46.68 lakhs. So I have given one example also. My recoverable amount will be this much. Assume the carrying amount of 40 lakhs and assume a recoverable amount of 46.68 lakhs. So I will take whichever. So in this case, is my asset impaired? So how do I come to know the impairment? See, my carrying amount is 40 lakhs, but I am going to recover higher. I will recover extra. So is there any issue? The answer is no. So there is no impairment. But if my carrying amount would have been higher, but I will recover only this much, so then it states my asset is impaired. Don't ratify this part that whichever is higher, whichever is lower. No, you will just apply a logic, basic logic, that if your carrying amount is 40 lakhs and if your recoverable amount is 46.8, That means you are going to recover more than your carrying amount. There is no impairment. But if your carrying amount is 50 and you will not even recover your carrying amount, that means your asset is impaired. So you will book an impairment loss. I hope this clarifies basic stuff for you, right? So now we can come towards the second point of concept, which talks about identifying whether an asset may be impaired or not. When is an asset impaired? When the carrying amount exceeds your recoverable amount. When carrying amount is higher, recoverable is lower. So you will book an impairment loss. Carrying amount easier to compute. Recoverable amount, it is higher of FEL, CTS and value in use. Already discussed this. Okay, FEL, CTS, very simple, fair value minus cost of disposal. Value in use, present value of future cash flows, right? So to find value in use, they say you need to take two key decisions. First one is you have to find the expected future cash flows. The second one being you need to have the discount rate. Both will be given in the question. Some basic discussion on value in use. When we say we want the expected future cash flows, what all things will be included in the cash flows? So it says the cash inflows from using the asset. Do you remember my example? The machine which I was using, I will use the machine, generate an output of biscuit. I will sell the biscuit. Those cash inflows are going to be my cash flows, right? Sometimes what happens is to generate these inflows, you also have to incur some outflows, right? So if there are any outflows, you will deduct the same. Don't worry, this will be given in the question. Apart from this, if there is any residual value, you will add in the last cash flow, right? Because if you are using the asset, you will sell it for scrap only at the end of the life. Okay. So these are the cash flows. Achha. The following cash flows are to be ignored. If there are any cash flows which arise from a future restructuring plan to which entity is not yet committed. Let's say, for example, I am doing teaching now. So my expected cash flow are this much, 2 lakhs, 3 lakhs, 3 lakhs, 4 lakhs, 3 lakhs. But I am thinking to tie up with BB sir. And this is not happening as of now. Let's assume this. Okay. So let's suppose I'm thinking of tying up with BB sir. And if I tie up with BB sir, these will be my cash flows. But have I tied up with BB sir? The answer is no. I'm just thinking. And neither there is any commitment as of now. So these cash flows which are going to increase on such a tie-up will have to be ignored. Why? Because it is not yet committed. It is only a thought process as of now, right? So ignore such cash flows. Okay, sir. Apart from this discount rate, in exam, if you want to compute value in use, always take a pre-tax discount rate, right? That is before tax discount rate. Why before tax? Because the cash flows are also before tax only. Is this clear to everyone? Yes, sir. Next point is guidance on foreign currency cash flows. What is the meaning of this? Let's say, for example, you are using the machine. I have an illustration here. Let's say, for example, you are using a machine, right? But the output you are generating is exported. So the cash flows also you are getting in dollars. But I am an Indian company. I want the value in use in rupees. So how do I convert it now? So there are two key decisions to be taken here. First, discounting factor, which country to be taken, and how to convert from dollars into rupees at which rate, right? So it is very simple. If you are generating any foreign currency cash flows, the discount rate you will use is not of India. You will use of US. Why? The currency in which you are generating the cash flows, that country's inflation will affect you, right? So use that country's discounting rate, first thing. Then you get the present value in dollars only. You have to convert the same in rupees. So at what rate you will convert? You will convert using the spot rate. Spot rate means the rate on which you are computing the value in use. Let's say, for example, we were computing value in use on this date. So take this date exchange rate. In question to confuse you, they will also give you certain future expected rates. Ignore them. Not to be considered. I hope this is clear to everyone. Right, guys? Okay, sir. Absolutely clear. Done. This was the point of foreign currency cash flows. Next point. Circumstances in which it is not necessary to calculate both FEL, CTS and value in use, or it is not possible to estimate either FEL, CTS or value in use. What does this point talk about? It says sometimes we need not find both FEL, CTS and value in use. When it is the case, in this case, let's say, for example, your carrying amount is 100. Standard will ask you whether can you compute both of them. I will say yes, I can compute both. If required, I can compute both. But I computed any one of these and this amount was already higher than carrying amount. The standard says we know that you can compute both, but no need to compute the other amount. Why? Because if you computed one amount and it is already higher than carrying amount, right? Then of course there is no impairment loss. So you need not calculate the other amount to save some time and resources. But only theoretical point, to be honest. There is a third point also which says that can you use estimates, averages, shortcuts to compute FEL, CTS or value in use? The answer is yes, you can use them. But out of these three, the important point is the second one. What does it say? No reliable estimate of FEL, CTS available. That means sometimes what happens is for any particular asset, you cannot compute the fair value less cost to sell. Then what to do? If FEL, CTS is not available, then your value in use will be a recoverable amount. Simple. But vice versa is not applicable. What is the meaning of this? But if value in use cannot be computed, FVL CTS cannot be assumed to be the recoverable amount. Sir, why this bhedbhav? Why this is the case, sir? Because the reason being, if FVL CTS is not available, value in use is assumed to be recoverable because the basic nature of these three assets, 16, 38, 40 is using them. That's why the value of use can alone be assumed to be recoverable amount. But if value in use is not available, then FVL CTS alone cannot be assumed to be recoverable amount. Sir, in this case, how do we do the impairment test then? In this case, you will say recoverable amount cannot be estimated reliably, and we will slowly move towards the concept of CGU, that is cash generating unit. So what is CGU? We will discuss at a later point. I hope this is clear to everyone. Okay. Then the next point is recognizing and measuring an impairment loss. That means in easy words, where will the impairment loss be transferred? So first check asset is at which model. If the asset is at cost model, impairment loss will be transferred to profit and loss. If the asset is at revaluation model, so the treatment of impairment loss will be same like revaluation loss. That means if the asset is at revaluation model and previously for this asset you had a revaluation gain which you transferred to OCI. So to the extent of previous gain, existing impairment loss will first be adjusted against OCI and then balance loss if any will be transferred to profit and loss. Right? So the treatment of impairment loss is same as revaluation loss. But do remember one conceptual point which I told you, that only the treatment is same like impairment loss, but the nature of both the losses are different. That means in case, let's say for example, this is one example which I discussed. Okay, so we have an impairment loss, we have some PP. Okay, then we got a gain, we booked the gain in OCI. Okay, then in the subsequent year we got a loss of how much? 1.33. So is the loss within the limit of previous gain? The answer is yes. That means the full loss will be adjusted against OCI. That means we are treating the impairment loss like revaluation loss only. But I said this, treatment is same. But nature of both losses are different. Why do I say this? Because revaluation loss you compute by comparing carrying amount and fair value. Impairment loss you compute by comparing carrying amount and recoverable amount. That is why nature is different, but the treatment is same. Right? Do you remember we discussed this in class as well? Okay. Then there is no note given. Note talks about that once you book an impairment loss, your carrying amount reduces. Let's see for example here. My carrying amount was previously 13.33. My recoverable was 12. So I booked an impairment loss of 1.33. As soon as I book an impairment loss, my carrying amount of asset will reduce. So now for future years, you will depreciate on the revised carrying amount. See, my revised carrying amount became 12 now. So for future years, I will depreciate on this revised carrying amount. As simple as that. Is this clear, guys? Yes. The next point is when to conduct impairment test. That is frequency of impairment test. How frequently do we compute the impairment, or we do the impairment test? Simple. In case of 3 assets, annual impairment test is compulsory. That is once in a year you have to do the impairment test. Which are those assets? Intangible asset with indefinite useful life, intangible assets under development, and goodwill acquired in a business combination. These are the 3 assets for which annual impairment test is compulsory. For all other assets, you will do the impairment test only when there is an indication. Indication can be of 2 types. External indicators, internal indicators. Give some examples of external indicators given here. Assets market values declined, significant changes in technology having adverse effect, or interest rate have increased. Sir, how does increase in interest rate be an indication of impairment? See, for example, you had a cash flow of 100. So if your discounting factor was 10, your present value would have come to 90.9. But as soon as you increase your discount rate, your present value will reduce, because increase in discount rate has an inverse effect on the present value, right? So it will reduce. So that is why increase in interest rate have a can be an indication of impairment. Similarly, there are some internal indicators also given here. But do remember, if the indicators are there, that doesn't mean the asset is impaired. Presence of indicators just indicates that the asset should be tested for impairment. Indication does not mean that you will definitely book an impairment loss. It means that you will have to check for impairment. Is this clear to everyone? So this was the point of indication of impairment, right? Sorry, indication of impairment and when to conduct the impairment test. So do remember, in 3 cases, annual impairment test. For other assets, only when there is an indication. Acha sir, how do we remember these 3 assets for annual impairment test? Simple. Simple hint is all 3 are intangible assets and all 3 are not amortized. Very simple. Is this clear to everyone? Yes, sir. Okay, let's proceed further. Next point is cash generating units. Now, what is the meaning of cash generating units? CGU. That means what happens in my case is, let's say for example, why do we come here? First of all, there are some individual assets which do not have independent cash flow. Let's say for example, my mic, it is an asset for me, but does it have any output which I can sell and generate cash flows? Like machine was there from which I was getting biscuits and selling the biscuit and generating cash flows. For machine, for this mic, can you say this? The answer is no. I have an iPad also through which I am teaching. Does it have some any independent cash flows? No, sir. I have a camera also which is there, but it alone does not generate any cash flow for me. It individually cannot generate any cash flow, right? So there are no independent cash flows in these cases. So if no independent cash flows, then no value in use. If no value in use, then no recoverable amount. So how do we do the impairment test? So now, what is the meaning of CGU? Let's assume this mic, this iPad, this camera, my PC, my desktop cannot generate independent cash flows. But can I say these together help me provide service to you through which I get your fees? Right? So these group of assets individually do not generate cash flows, but in group they assist me to generate cash flows in the form of fees. So these group of assets are known as CGU, right? Group of assets which generates cash flows together. So in this case, when the group of assets are generating cash flows together, the impairment test of this group will be done together as a group and not individually, right? So this is known as CGU, cash generating unit. So to discuss CGU, what we will do is we will refer some examples which I gave you in the class, right? So it is given group of assets that generates cash flows together. Example, AK sir's teaching setup, right? For example, my teaching setup. I hope you are able to recall things, okay? So example number 1, let's say I have a laptop, camera, iPad, mic. Individual carrying amount I have, total comes to 650. Recoverable amount is given 520. Of course, individual recoverable is not available. That is why we are coming under CGU now. So don't say why recoverable, individual not available, sir. Individual recoverable was not available. That is why we are coming under CGU. So CGU's recoverable is given 520. So of course carrying amount is 650, but you are going to recover only 520. So there is an impairment loss. How do we book the impairment loss? So now this impairment loss will be allocated to individual assets. How do we allocate? Not equally, in the ratio of carrying amount. Simple. So this is how the impairment test of CGU is done. Okay. Can the CGU have liabilities also? The answer is yes. CGU can have liabilities, but only specific liabilities which belong to these assets. Sir, what can be those liabilities? Provision for decommissioning can be a liability, right? So if there is any liability here, let's say for example, there is a provision for decommissioning, just less it for the CGU. All the assets will be added. If any liability, it will be deducted for the carrying amount of CGU. Do remember that part. Okay. Yeah. Then there is a concept of goodwill also in CGU. Now, why goodwill is discussed here? See, individual impairment test of goodwill is not possible. Why? Because goodwill also does not generate individual cash flows. But yes, because of goodwill, your business will achieve some extra cash flows, extra profits, right? So goodwill will assist your CGU, will assist your business to generate more cash flows. But individually, it cannot be tested for impairment. So that is why goodwill is also allocated to CGUs. Now, how do we allocate? So let's say, for example, one company can have more than one CGUs. Do remember this point. So let's say there is a company AK Limited. It has two CGUs, CGU1 and CGU2. CGU1 is for CA business, CGU2 is for CFA business. Now I have a goodwill of 2 lakhs. Now there can be 3 cases for goodwill. The first case being goodwill benefits only in CGU1, right? So how do we solve this case? So this goodwill will only be allocated to CGU1 because it only benefits CGU1. So while doing the impairment test of CGU1, you will write all the assets. Let's say I had 3 assets only. And I wrote goodwill also. I wrote goodwill full 2 lakhs here because goodwill benefits only in CGU1, right? So now then recoverable amount would always be given. I got the impairment loss. Now, normally what we do is this impairment loss is allocated to all the assets in the ratio of carrying amount. But when your CGU has goodwill also, this impairment loss will first be adjusted against goodwill. And then the balance impairment loss will be allocated to other assets in the ratio of carrying amount. Now, first, why do we write off against goodwill? The reason I told you was because what does goodwill mean? Goodwill means that you will generate abnormal profits, extra profits. So if your CGU is getting impaired, that means there is no more goodwill left in your market, right? So first write off the goodwill. Simple. Okay. Now, when you are testing CGU2 also, because in my business, I had 2 CGUs. So in case 1, when goodwill was benefit only CGU1, no goodwill will be allocated to CGU2. So CGU2 impairment test will be done normally. Simple. Then there was case 2 also, where goodwill benefits in both CGUs. And the benefit level will also given. That goodwill will benefit in CGU1 and CGU2. How much benefit of goodwill in CGU1? 25%. How much benefit in CGU2? 75%. Sir, how do you get this 25-75 given in the question? Okay. So what if is this not available? That is our case number 3 that we will discuss later on. So case 2, if it can be allocated, it is simple. Just allocate and do the impairment test in both the CGUs. Let's say for example in CGU1 the benefit was 25%. So in carrying amount of CGU, I will just take 25% value of goodwill here, and then I will conduct the impairment test. If there is any loss up to the value of goodwill, first goodwill bear the losses, then the balance assets in the ratio of carrying amount. Simple. In CGU2, 75% goodwill will be allocated because 75% benefit is there in CGU2. But in CGU2 there was no impairment loss, so no allocation will be done. Simple. The critical part here is case 3. Goodwill benefits in both CGUs, but it cannot be allocated. Do you remember when this was the case? When it benefits in both CGUs, but you cannot tell me how much percentage benefit in CGU1 and how much percentage benefit in CGU2. Allocation ratio is not available. So how do we conduct the impairment test? Perfect answer in this case. We will conduct the impairment test in how many stages? 2 stages. How do we conduct the test? First, we will say you have to conduct the impairment test in 2 stages. How? First stage, in stage 1, you will conduct the impairment test of individual CGUs, assuming there is no goodwill. So test your CGU1, test your CGU2, assuming there is no goodwill. Okay, sir. So we tested both of them. Of course, the impairment loss, whatever you get, will be allocated only between the assets and not goodwill, because we are assuming there is no goodwill. Okay. So we tested 1 and 2. Then you will combine CGU1 and 2. Then add goodwill. Why? See, goodwill's individual allocation not available, but we know now goodwill benefits both of them. So in stage 2, what we will do is we will take CGU1, we will take CGU2, combine both of them and add goodwill to it. So we took CGU1, we took CGU2, we added goodwill, we got the total, right? So when you get the carrying amount, how will you get the carrying amount? Copy the carrying amount from stage 1. In stage 1, my CGU1 was impaired, so I will take the revised carrying amount of 18 lakhs. In stage 2, CGU2 was normal, not impaired, so I will take the normal carrying amount. So take these carrying amounts, add goodwill to it. You will get the normal carrying amount. Then recoverable amount of this whole will be given in the question. You get an impairment loss. This loss again will be first written off against the goodwill. So what if the loss exceeds the value of goodwill? Now let me give you one conceptual clarity. When you are doing test under 2 stages, in stage 2, we are only here to test because of goodwill. These CGU 1 and 2 are already tested in stage 1. So the loss, whatever you get, will not exceed the amount of goodwill. It cannot exceed the amount of goodwill. Why? Because you cannot allocate any further loss to 1 and 2. They have already been tested for impairment now. So why will you allocate any further loss to them? Remember? Yes, sir. So it is written here also. In stage 2, impairment loss cannot be more than 2 lakhs. As in stage 2, we came only to test goodwill, as 1 and 2 are already tested for impairment. Simple. So this was the concept of goodwill. I have spent a lot of time in revising this point. Please make sure you know it thoroughly. Okay. Then the next point, allocation of corporate assets to CGUs. Right now, what is the meaning of this? Sometimes I have some corporate assets, like for example, in my teaching business, I have a let's say office where the students come and take admissions. So that office does not have any independent cash flows, but that office will assist my teaching business to generate cash flows, right? So such corporate asset will also have to be allocated to CGUs, right? So here also there are 3 cases like goodwill only. There are 3 cases only like goodwill. Case 1, corporate asset, individual cash flow not available, so no value in use, therefore allocate to CGUs. So now let's say again I have 2 CGUs and I have a corporate asset. Again 3 cases just like goodwill, right? Case 1, it benefits only in CGU1. So if it benefits in CGU1, allocate it to CGU1. Now the differential part here is, if you are allocating to CGU1 and you get a loss, don't do the mistake of allocating the full loss first to corporate asset. This is not goodwill. That we follow only for goodwill. So if you have a corporate asset and you get a loss, such loss will be allocated between all the assets, including corporate asset, in the ratio of carrying amount. So here corporate asset will not be the person to bear the full loss initially. That is not the case here. Okay, do remember that part. Same is the case with CGU2 also. It benefits in both CGUs, but allocation ratio is given 30-70. So 30% allocated to CGU1, 70% allocated to CGU2. That is simple. But the important point here is case 3. Benefits in both CGU, but not allocable. So in this case, in how many stages we will conduct the impairment test? Perfect answer, we will conduct the test in 2 stages. Stage 1, test the CGUs, assuming there is no corporate asset. So we tested 1 and 2. Then in stage 2, we will test both the CGU1, CGU2 plus the corporate asset. Right? Now we will, if we get any loss, ideally what we say, in case of corporate asset, Do not allocate to full corporate. We will say, sir, allocate to all of them, but apply some logic. This is stage 2. In stage 1, CGU 1 and CGU 2 have already been tested. So if you get any loss and in stage 2, this loss by default has to be allocated only to the corporate asset. Why, sir? You told allocate to all of them. In stage 2, we are coming after testing CGU 1 and 2. So this 1 and 2 have already been tested for impairment in stage 1. This CGU 1 and 2 have already been tested for impairment in stage 1. So here if you get any loss, you will allocate only to the corporate asset, because we are coming in stage 2 only to test this corporate asset, right? Yes, sir, done and dusted. Now the 7th point is here. Recognition and measurement of an impairment loss for CGU. If you get any impairment loss in CGU, first allocate to goodwill. Then you will allocate to all other assets, including corporate asset. But except those assets which are outside the scope. What is the meaning of this, sir? Sometimes your CGU might have certain assets which are forming part of CGU, but not under the scope of 36. Example, under the scope of 36, only we have PP, intangible investment property. So if there are any other assets apart from this in the CGU, they can form part of CGU, but no impairment loss will be allocated to them. Okay. Now we have the next point. Next point you will understand after illustration number 32. Okay. And then we have one more point, and that says that if, let's say for example, you have a PP, right? The recoverable amount value in is not available and FELCTS is 9 lakhs, right? So if value in use is not available, can you say that 9 lakhs is recoverable amount? The answer is no. In this case, we will say that recoverable amount cannot be estimated reliably. And in this case, this PP has to be allocated to the CGU. Now, if the question says that the CGU is not impaired, and it will ask you, if the CGU to which this PPE was allocated is not impaired, whether this PPE will be impaired or not. So your answer will be no, sir. If the CGU is not impaired, then this PPE also will not be impaired. A common sense point which is given here. Okay, sir. Now again a good point, and that is reversal of impairment loss. Whatever loss you booked, see, there is no concept of impairment gain. Either there is impairment loss or there is reversal of impairment loss. So for example, let's say you while booking an impairment loss, what entry do you pass? You pass an entry impairment loss to PP, right? So if you book a loss initially on the same asset, if the conditions reverse, you can reverse the loss as well. So the reversal entry will be when you reverse. Of course, it is like an income to you. So reversal of impairment loss. But do remember, you can only reverse the loss which you had previously booked. You cannot reverse any loss in excess of it. Okay, do remember this point. Okay, sir. So reversal of impairment loss. Now, some theory points are given that when do we check for reversal? Like for impairment also, if we had indications, then we should check for impairment. Similarly for reversal also, if you have any indication of reversal, then only check for reversal, right? So indications for reversal can be again of two types, external, internal. These are the exact opposite of the indication of impairment. The reversal indications are exact opposite of the impairment indications. Okay, you can just give it a read. Okay, sir. This point, the one note is given. We will understand this with illustration 25-26. Don't worry. Okay. Then treatment of reversal of impairment loss. How do you treat the reversal? So in case of individual asset, if the asset is at cost model, the reversal will be transferred to profit and loss, like a income. Why do we this income? See this entry now. For reversal, you will credit the reversal of impairment loss. So it is like an income to you. So if the asset is at cost model, reversal will be transferred to profit and loss. If the asset is at revaluation model, such reversal will be treated like a revaluation gain. Such reversal will be treated like a revaluation gain. But only the treatment is same. The nature is of course different. Anyways, what about CGU, sir? Can in CGU also reversal happen? The answer is yes. In CGU also reversal can be done. Reversal of impairment loss can be done in CGU also. But in case of one asset, reversal is not allowed, and that is goodwill. So in CGU, if you book any loss for goodwill, that impairment loss for goodwill cannot be reversed. Sir, why? Because if you are reversing impairment loss on goodwill, it is just like booking self-generated goodwill, which is not permitted. So that is not allowed. Okay. So how do we do the reversal, sir? So for that, I have some examples for you. We can refer them. Let's see. Here. First of all, we will talk about reversal of impairment loss in case of individual asset very quickly. Let's say, for example, I had an asset of 200. I used it for 2 years. So I depreciated it. My carrying amount was 160. Recoverable amount was given as 120 and it says there is an indication of impairment. So I will book an impairment loss of 40. Okay, sir. Then I get the revised carrying amount of 120. Then I will depreciate. I used it for 2 years. So I used it for 1 year. I used it for 2 years. My depreciation reduced because it was calculated on revised carrying amount. Okay, sir. Then I got a carrying amount of 90. Then there is an indication of reversal now. So recoverable amount was given as 140. So now I need to do the reversal. First, compare the carrying amount and recoverable amount to find the actual reversal. On the face of it, how much reversal can you see? 50. But is the reversal of 50 permitted? The answer is no. You can only reverse the loss which you previously booked. So ideally you booked only 40 now. So you should be permitted to reverse how much? 40. But that is not the correct answer also. Why? To find the maximum reversal, you will have to prepare a working note where you will find two amounts. First, carrying amount today if there was no impairment loss. So let's say, for example, if there was no impairment loss, if there was no impairment in between, what would have been the carrying amount on 31st March 16, that is today? So if there was no impairment loss, I would have depreciated the asset for 4 years on a SLM basis. So it would have been 120. Just compare this carrying amount with the second amount, and that is carrying amount today. In reality, what is the carrying amount after impairment today? That is 90. Take this value here. So you will get the maximum reversal of 30. You can only reverse this much. Sir, why it is not coming to 40 and why 30? The reason being, when you book a loss, you also save rupees 5 depreciation for 2 years. So your net loss was only 30. Why? You booked a loss of 40. You saved depreciation of rupees 5 na each year after booking the loss. Because see, previously your depreciation was 20. Now it is only coming to 15. So you are saving rupees 5 each year. Right? So that is why the net loss was only 30. So maximum reversal will be 30. This is only for your logic. But in exam, you have to find with this working note. Again, to find the maximum reversal, we need two values. One, carrying amount if there was no impairment. And second, actual carrying amount today after impairment. Just compare, you will get the maximum reversal. So the actual reversal on the face of it is 50. But maximum you can reverse is only 30. So you will take whichever is lower. So you will reverse only 30. Simple. Is this clear to everyone? Yes. This was the reversal of impairment loss on individual asset. Now we will talk about reversal of impairment loss on CGU. Right? How do we check for the reversal of impairment loss in CGU? So let's say, for example, I have a CGU where there are other assets comprising of 3 items and there is goodwill. So total of these 3 items is 20 lakhs and goodwill is 2 lakhs. Okay. Life is 10 years, other assets. So let's say, for example, I use the asset for 1 year. 1 year depreciation I will charge. I will only depreciate other assets and not goodwill. Why? Goodwill is not amortized. It is only tested for impairment annually. Okay, sir. So did not amortize goodwill. So I got a carrying amount of 18 lakhs and 2 lakhs. Total 20 lakhs. Recoverable amount is given as 15 lakhs. Of course, there is a loss. Impairment loss of 5 lakhs. First allocate against goodwill and then against other assets. No problem, sir. We got the revised carrying amount and then we will depreciate for 1 more year. So we got the value of other assets. Goodwill is become nil because of impairment. Now there is an indication of reversal. How much is the recoverable amount? 20. So on the face of it, how much actual reversal can you see? This much. But can you reverse this much? The answer is no. You will find maximum reversal. How do you find? Again, prepare a working note for this now. First, I want the carrying amount if no impairment. But do you remember in CGU, we cannot reverse impairment loss on goodwill. So here, when you take the carrying amount if there was no impairment, exclude goodwill from it. So let's say, for example, if there was no impairment, where is my impairment? If there was no impairment, just ignore goodwill because we cannot reverse on goodwill. Just see these other assets. So if there was no impairment, I would have depreciated these other assets for 1 and 2 years, right? 2 years. Yeah, 2 years. Yeah, 1 year, 2 year on SLM basis. So my carrying amount would have been how much? My carrying amount, if there was no impairment, would have been 16 lakhs. Why? 20 lakhs minus 2 years depreciation, that is 4 lakhs minus. Exclude goodwill. Do not consider goodwill, okay? Because goodwill reversal not permitted. First amount. Second amount, we want what is the actual carrying amount today after impairment. So actual carrying amount is already available here. Actual carrying amount today is here. Actual carrying amount 13.33 lakhs. You write this. Difference between the two is maximum reversal. Yes. So you can only reverse maximum this much. So actual reversal is shown at this much, but maximum you can reverse this. Take whichever is lower. So reverse this. Right. Don't worry. This board notes I will also upload on my Telegram. You can find it and use it for your purpose. Okay. I hope this helps, guys. Okay. So here it is given maximum amount of reversal. How do we compute it? It is given carrying amount if no impairment and carrying amount after impairment. You will get the maximum reversal. Simple. Now there is one more point, point number 9. That is non-controlling interest. So as of now, we have not done IND AS 103 in our class, right? So we will do this revision. I will record a separate revision for this separately. Okay. So this point and the related questions of this point I will do in that separate revision video. So don't think that this is to be skipped. No, you have to complete this, but I will upload a separate video on this, separate concept video, and to this concept there are 4-5 questions which are there, that also I will do it separately in a revision video. Why am I not discussing it? Because as of now my students who are studying English batch, they have not done IND AS 103. So once it gets done, they will also understand easily, and then we can do it. Is this clear to everyone? Perfect. Yes sir. Okay, now this was the concept revision. I hope you like it. Okay, but the special feature here is we will also revise certain important questions. Okay, so let's come. I will also revise the important questions. Okay, the ones which are very basic, you can try it at your home, you can do it alone also. Okay, so one was illustration number 10, which is a good question. It talks about reversal in case of CGU. How do we do it? See, we have a other asset of 320, goodwill of 80, right, which was there on 1st April 11. Then they say after 2 years there is an indication of impairment. So first get the carrying amount after 2 years, right? So life is given, and I guess recoverable amount is also given, 2,12,000. So how do we do it? See, I will teach you it here. See, illustration number 10, other assets, goodwill, 4 lakhs value. First, because we want to test for impairment after 2 years, first depreciate for 2 years. You get the carrying amount. Recoverable amount is given. You get the impairment loss of 1,56,000. First allocate against goodwill and then balance against other assets. Okay, you get the revised carrying amount. No problem, sir. Carrying amount revised, depreciation will also change prospectively. Now they say after 2 years, again, there is an indication of reversal. So check for reversal, sir. How do we check? First, get the carrying amount again after 2 years. So depreciate for 2 years. You will get the carrying amount after 2 years. Right, recoverable amount is higher of this much, it is given 3,04,000. Actual reversal on the face of it is a difference between the two, it is 1,15,556, but you need to compute the maximum reversal. How do we compute the carrying amount if there was no impairment? But this is CGU, so exclude goodwill from this. Okay, so if there was no impairment, I would have depreciated my other assets on a SLM basis for 4 years now, 2 years here and 2 years here on a SLM basis. So my carrying amount would have been, if there was no impairment, it would have been 2,56,000. Then my recoverable, or then second amount you want is carrying amount after impairment. That is the real carrying amount, which you need not compute. You already have this 188,444. You will get the maximum reversal, right? So you can maximum reverse only this much, to take whichever is lower out of these two. Remember one thing, when I'm revising the questions, revision is not a replacement of writing practice. So even if I'm revising, even if you're listening to my revision videos, you will just see which are the important points. Make sure you are not forgetting them, but you have to do the writing practice of these illustrations as well. Okay, do remember that part. Okay, sir, got it. Let's proceed further. This was illustration number 10. See, under certain illustration, I've written CP. CP means common pool. Do you remember one point which was pending in revision? To that point, these questions relate. So when I'm revising that point, I will also take up these questions. That doesn't mean this question are not important. Now, these are important. So I will take the important question out of these when I'm revising that particular concept. Don't worry about it. Okay, sir. Then the next important question here, which I feel is illustration number 21, right? So this also is a good illustration. Here, first of all, some information was given. This information will be used to compute the goodwill, right? Again, you don't know 103, so we will not be able to use if you don't know 103, but in case if you know it, this information shows how to compute goodwill. Once you get the goodwill, the question says that we have 3 CGUs, and it says the goodwill can be reasonably allocated to all the CGUs A, B, C in the ratio of 2:2:1. That means, do you remember for CGU we discussed 3 cases in case of goodwill, right? One, it can be allocated to only one CGU. Second case was it was allocable to all CGUs in some ratio, and the third case was it cannot be allocated to it benefits all the CGUs but cannot be allocated. So I guess when the question says you have a goodwill and the ratio is 2:2:1 for the 3 CGUs, I guess we are falling under case number 2. That means it can be allocated. So it is simple. You will do the test only in one stage, allocate the goodwill and conduct the impairment test, right? It is so simple. So how do you do it? See, if you want, I can show it to you. Where is my illustration number 21? Here it is. See, I computed goodwill. Goodwill I got allocated to all the CGUs. Ratio was given in the question. So when you are conducting test for individual CGU, just add goodwill also. If you get any loss, very good. First allocate against goodwill. If there is no loss, no problem. Okay, if the loss exceeds your goodwill, first against goodwill, balance loss against the other assets. So it is as simple as that, right? This was illustration number 21, very simple. Then you also have a illustration number 23. Again, a good question. What does this question talk about? You have 3 CGUs, A, B, C. You also have 2 corporate assets. The first corporate asset has a carrying amount of 600, it says it can be reasonably allocated to all the CGUs, but on a pro rata basis. So normally if I want to allocate this between all the CGUs, I will allocate in the ratio of carrying amount. But in this question, what we have done is we have allocated in the ratio of carrying amount and useful life, the weighted average ratio of this. That is, multiply the carrying amount and useful life and then allocate in this ratio. Why we did this? Because ICI has done this. Simple. So we allocated X in all the three between this weighted average ratio. Okay. What about Y? It says Y cannot be allocated on a reasonable basis. So for this Y, we have to conduct implementation 2 stages. First stage, where we will test the individual CGUs, including the corporate asset X, but excluding Y. And then in stage number 2, we will add all the CGUs and we will also add Y, right? Because Y cannot be allocated individually. So that is why we have to conduct the test in 2 stages. First of individual CGUs and then for the whole group as a whole, right? So how do we do it? See, it is very simple. Where is my illustration number 23 here? See, I allocated X between the ratio between A, B and C in the ratio as we discussed. Then we did stage 1 individual test including X but excluding Y. Why are we including X? Because it can be allocated, right? So we did the testing. Do remember, if you get any loss, do not allocate the whole loss to only corporate asset. Here you have, it is not goodwill, right? So first, whatever loss you get, you will allocate between corporate asset as well as the other assets. Clear? Okay, sir. Then we did the test in stage 2, where we will combine A, B and C. Take the revised carrying amount, whatever you have after impairment loss. Take the revised carrying amount of each CGU and include Y here. So why not included X? In CGU A, B and C, X is already included. So need not add X again. We will just add Y again. Okay? Okay, done, sir. So this was the illustration number 23, a good illustration. Okay. 24 is again a common pool. So not saying that it's not important, just saying that this will be discussed in that particular point number 9. Okay. Yeah. Then, acha, we have a illustration 25 and 26. This illustration is based on a point where it says, I'll just revise it. Let's say, for example, in illustration number 25, we got an impairment loss of 4.69. Okay. In illustration number 26, that is 1 year after, it is a continuation 25. Okay. 1 year after, it says it shows a reversal. But in this question, it says you will not reverse anything. Why? Because in this question, it was mentioned that your cash flows estimate do not change. Whatever cash flows were there in the previous year, the same persist in the next year as well. So the reversal, even if it is shown, you will not do it. Why? Because such reversal is only seen because the cash flows have come 1 year closer. Like in the previous year, we were multiplying 30 by the second year discounting factor. Here in the next year, we are multiplying 30 by the first year discounting factor, right? So just read this illustration 25-26. You will come to know that you will see the reversal, but you will not reverse it because the capacity of the service potential of the asset has not increased, right? Do you remember this point? Yes. In case you are not able to recall, just revise it once. You will be able to recall. That is fine. Then you can also solve 27. Not a LDR question, but just a good question. Exam question also, you can just refer it. Okay, 27. Then we have illustration number 32. One of the best questions of, you can say, Index 36. Reason being, it covers each and every concept. I will just try to give a brief about it. But please remember, I'm just revising this question here. You have to practice it 2 to 3 times to get a grip of it. But do practice it, okay? What does it say? So we have a machine A. Machine A have an individual output. So it can be tested for impairment individually. We also have a machine B, but it says that machine B cannot be tested individually. It has to be clubbed with A for testing. So that is, there is a CGU here. But the issue here is machine A can be done with individual impairment test. But for machine B, it says you have to club A again. You have to club machine A again with B. Also in the CGU, apart from machine A and machine B, there is also an inventory and there is also a goodwill, right? So now, just to first summarize things, do you remember I had prepared a chart here once? I will show it to you. Here, machine A, individual test possible. Machine B, individual test not possible. So you will test under CGU. So in CGU, you will have machine A, machine B, inventory, goodwill. But do remember one thing, machine A, individual testing already done. So even if you are including machine A here, and if you get any loss in CGU, such a loss will not be further allocated to A. Why? Because the testing of A has already been done individually. Okay. So if you get any loss, you will only allocate between goodwill and machine B. Sir, why not inventory? inventory is out of scope, so no allocation. Why not machine A? Machine A test already done, so no allocation. Okay, so likewise what we did was, we first did the impairment test of machine A. We got any loss, okay, so we allocated against the machine A. Then we did the impairment test of CGU. In CGU, whatever loss we got, we allocated only against goodwill and machine B. See, no loss to machine A and inventory. This is clear. This was the first part of the question. Then the second part talks about computing depreciation after booking the impairment loss. So your depreciation for the future year will change prospectively now. So we computed depreciation based on the life and based on the whatever carrying amount you have. Acha, remember one thing, in this question, machine A has a residual value. So while computing depreciation, don't forget to consider this, because in SLM we do cost minus residual value divided by number of years. Also, when computing recoverable amount, don't forget to add it in the last year cash flow. You will make this mistake, that is why highlighting this point. Okay, sir. So this was point A and point B. I hope this is clear. So in point A, we computed test of machine A. We did test of CGU. In point B, we find it out the depreciation after impairment loss. In point C, we have to do reversal. Reversal of again machine A and the CGU. How do we do the reversal of machine A? We have the carrying amount, recoverable amount given in the question. So first the actual reversal, then you will find the maximum reversal. Maximum reversal, it is very simple. Find the carrying amount of machine A today if there was no impairment, this much, and carrying amount after impairment, this much. You will get the maximum reversal. So I will reverse this much. In CGU, there will be 4 assets: machine A, B, inventory, goodwill. Just write the carrying amount first. For machine A, we will take the revised carrying amount. For machine B, we already have the carrying amount. Inventory, same it is. Goodwill was written off already in the impairment loss, so no goodwill. You get the carrying amount. Now recoverable amount. Now there is one confusing point here. First, the recoverable value of CGU is given as 11 lakhs. Right? But ICAI in its solution has not taken 11 lakhs. What they have done is, one combined value of machine A and B was given 7 lakh 60. So they took this 7 lakh 60 and added the value of inventory of 2 lakhs. That is, how did they find the recoverable amount? They did not take 11 lakhs. They took combined value of machine A and B plus the value of inventory and found out the recoverable amount. So in exam also you need to follow this. Okay. So compare the carrying amount, recoverable amount, you will get the actual reversal. Then find the maximum reversal. It is very simple to find out. You need to find the carrying amount of CGU if there was no impairment. So how do I find it? So there are so many items. So find the carrying amount of each item individually. Machine A, we already have the value. Machine B, simple. If there was no impairment loss, what would have been the carrying amount today? Inventory, so that 2 lakhs. Goodwill, don't take anything because reversal not permitted. You will get the carrying amount. Then second value you need is carrying amount of CGU after impairment, which you can copy with the latest carrying amount here. Copy this, you will find the maximum reversal. So this reversal will be allocated between whom? Goodwill, reversal not permitted. Inventory, it is out of scope. And for machine A, individual reversal already done. So this reversal is only for machine B. Do remember this point. Okay. Again, I am saying I have just given an overview of this question. It is not a replacement writing practice. Do write in practice. Okay. Okay, then we have illustration number 33, a good question which talks about how to find the value in use. So in here, normally what in certain questions, what was there was directly the cash flows were given in each year. For this question, what we will do is, they have given for each year the number of units, the selling price, the cost price. So I will just show you the format, right? I am not reading the question as a whole, just showing you the format. So it is given that for future years, what will be the selling price each year? Then the number of units sold will be given. So multiply the per unit selling price with the number of units. So you will get the cash inflows. Then the cost is also given. So multiply the number of units by the cost. You will get the cash outflows. So inflows minus outflows, you will get net cash flows. Apart from this, there were 2 other cash flows. One was maintenance cost. Maintenance cost is incurred only in 1 year. So deduct from that particular cash flow. And one was residual value, add in the last year cash flow. So you will get the net cash flows. Right? How do we get the net cash flows? Add all the inflows and deduct all the outflows. Simple, right? Then to this cash flows, apply the discounting rate and add all your cash flows. You will get the value in use. That's it. So just giving you the shown the format, just practice it. It is good question. Okay. Then we have illustration 34, not LDR, but just refer it. It is a good question for practice. Okay. Then 1 is common pool. Question number 1 is common pool. Question number 2 is also common pool. And 3 is a simple question. Okay. Nothing. So with this, we are done with the revision of IND AS 33. I hope this was helpful. Apart from that, point number 9, we revised each and every concept along with questions also. Given you the list of important questions to be focused on. Of course, you should read all the remaining questions also, but just given a list of the questions which cover all the concepts. So I hope this proves to be helpful. If this was helpful, if you have watched till here, do leave a comment whether this was helpful or not. So till then, thank you so much. Do like the video, share it with your friends. Bye bye everyone. Take care. See you all. Bye bye.